Hello and welcome. You tune into Market Cafe. Good morning. I'm Ankita Saxena and with me is Shrishti Sharma. In the next 1 hour, we'll take you through all that happened yesterday in the trading session and on Wall Street, and of course the cues that you need to watch out for before the start of the street today. But first up, let's take stock of how the global markets shaped up. Let's talk about the US markets. As far as Wall Street is concerned, we do see cuts coming in on the Wall Street. A bit of a moderation. Dow Jones was down 0.8%, 398 point cuts is what we saw on Dow Jones. S&P 500 also traded down 13 odd points, very flat moves, but it closed in the red nonetheless. Nasdaq Composite also shed almost 24 odd points, so very flat moves coming in on S&P and Nasdaq, though they shut shop in the red. Dow Jones, however, saw the sharpest fall of 0.8%. As far as stock futures are concerned, stock futures are trading slightly flattish right now, with Dow Jones that has shed 39 odd points, that's marginally lower, and Nasdaq is also Nasdaq though has inched up 0.1%, so flat moves right now. We are awaiting a lot of earnings on Wall Street as well. We are expecting Bank of America, Wells Fargo, Citigroup to report their quarterly earnings. More inflation data is also on the docket. As far as December's producer price index report is concerned, that will be released today as well. So a lot of data points that will be coming out of Wall Street as well, because back home also we have started with the earnings season. Shrishti.
Well, indeed, Ankita, a lot of these counters will be in focus on the back of the earnings. And just yesterday, even JP Morgan did report its numbers, though the numbers were quite good, but the trading volumes were not that great. And because of that, even the stock slipped almost 4%, and even the markets were seen to be digesting the inflation print. But let's talk about what's been happening within the commodity world. It's the oil that has seen a jump because, yes, of course, the kind of commentary coming in by Donald Trump on Iran specifically, that has really made the commodity move higher. And as of now, Brent oil is trading above that $65 per barrel mark, and even for now, it's a 2% jump that we are seeing on the crude oil prices, while the rally continues when it comes to the gold and silver prices. Gold is higher by almost 1% as we speak right now, very near to its all-time high levels, while for silver as well, it's over a 2% jump is what we are seeing on that particular commodity.
All right, so that's where oil is at. But let's talk about the macro data that came out of US. Fresh inflation, economic data that was out. Inflation looks a touch cooler than expected. Now, core CPI rose 2.6% on a year-on-year basis in the month of December, just below the forecasts, while the headline CPI matched estimates at 2.7%. Now, on a monthly basis, core prices gained 0.2% and the headline inflation rose 0.3%. The numbers reinforce hopes that price pressure are easing, and even as Federal Reserve weighs in its next move on the interest rates, inflation numbers have also impacted the commodities. Now, gold and silver have hit record high, remember, as inflation data has cemented bets on Federal Reserve rate cuts this year. Now, the persistent geopolitical and the economic uncertainties have driven the safe haven demand as well. So we did see gold prices also touching record high this year.
Indeed, but it's US President Donald Trump that doubles down on the big claims. He asserted historic growth, high household income, private sector strength, disinflation, and global investor interest in US economy. He pushed a 25% tariff on any country doing business with Iran, upping the pressure amid the protest and raising the trade tensions and potential cost burdens on consumers. He also highlighted heavy 25% tariffs on imported cars to spur domestic auto investment and boasted that they will rebuild Venezuelan oil industry with private capital. Let's go across and listen in.
The inflation numbers just came out, and we have very low inflation, so that would give Tulane Powell the chance to give us a nice, beautiful, big rate cut, which would be great for the country. But rates are falling also, and growth is going up. He's billions of dollars over budget, so he either is incompetent or he's crooked. I don't know what he is, but he doesn't do a very good job.
And well, Trump also launched fresh attacks on Powell, calling him incompetent or crooked, and declaring that jerk will soon be gone. And the remarks come as Trump's Justice Department probes cost overruns at the Fed, stoking fears over central banks' independence. Let's listen in.
Today, if you announce great numbers, they raise interest rates to try and kill it. So you can never really have the kind of rally you should have. What happens and what we want, we're going to have a lot of great months, a lot of great quarters,
I want the market to go up. You announce unbelievable numbers and the market goes down because they know you're going to do everything possible. In the Fed, we have a real stiff in the Fed, but that's for another day. But they raise rates. So everyone says, oh, they announced great numbers. It's great, great, great. And the market goes down because they immediately raise rates. No, when the market goes up, they should lower rates.
And Greenland's Prime Minister Jens Frederik Nielsen has hit back at Trump's renewed push to bring the Arctic island under US control, now declaring that they choose Denmark, not the United States. Standing with Danish PM Mette Frederiksen, Nielsen reaffirmed Greenland's loyalty to Denmark, NATO and EU ahead of high-stakes talks at White House. Now, Trump has said that the US needs Greenland for national security and is ready to pursue control one way or another.
And well, JP Morgan shares plunged even after beating fourth quarter estimates as trading revenue surged, led by a 40% jump in the equity trading. However, investment banking disappointed and CEO Jamie Dimon warned markets may be underpricing geopolitical and the inflation risks.
And campaigning for the high-stakes election to 29 municipal corporations in Maharashtra culminated yesterday with all eyes fixed on the big fight for Mumbai, where the BJP-led Mahayuti is making strong pitch to control BMC in the face of challenge from a united Thackeray front. Now, notably, this would be the first BMC election for the Shiv Sena since 2022 split, which saw party leader Eknath Shinde leaving with a majority of the legislators, the party name and symbol. But with this, let's go across to my colleague Anurag Shah to know about more on the BMC election and candidates.
After a gap of 9 years, BMC elections are happening and Mumbaikars would be voting on 15th of January. So why BMC elections are important and all eyes on BMC election? Because Asia's richest civic body with budget of more than 70,000 crore. This time in year 2026, for 227 seats, there are 1,729 candidates in fray for the 227 seats, and high stakes in polls because BMC controls road, water, garbage, transport, and infrastructure. So BMC elections are important and all eyes of not only of Mumbaikar but various other parts also on BMC election. So if we talk about the richest candidates in BMC election, then BJP's Markand Narvekar has declared his assets of 124 crore. The second richest candidate is also from BJP, Harshida Narvekar. She has declared assets of 63 crore. The third candidate is Sana Qureshi of Samajwadi Party. She is fighting election for the first time and declared assets of 60 crore. The fourth one is Samadhan Sarvankar, son of Shiv Sena leader Sada Sarvankar. He has declared assets of 46 crore. The fifth one is Shraddha Jadhav, former mayor of Mumbai, from Shiv Sena UBT, Uddhav Balasaheb Thackeray. She has also declared assets of 46 crore. But this time, BMC elections are altogether different from 2017 because Shiv Sena was undivided, but now there's a split in Shiv Sena. The ruling alliance is of BJP and Shiv Sena led by Eknath Shinde against Shiv Sena UBT, and Shiv Sena UBT is in alliance with Raj Thakray's MNS. So these are the two main blocks contesting. So Mahayuti is having BJP, Shiv Sena of Eknath Shinde, few seats by RPI and NCP also of Ajit Pawar, against Shiv Sena UBT by Uddhav Thackeray, MNS Raj Thackeray, and few seats by NCP Sharad Chandra Pawar also. Congress is also fighting this election in alliance with Vanchut Bahujan Aghadi. But top issues this time in election is garbage issue, solid waste management, bad roads and potholes we have seen during monsoon, the situation of Mumbai roads. So it's a main issue by Mumbaikars about the road across the city. Then flooding and drainage failures is also important issue raised by Mumbaikar. Then redevelopment and housing delays, Mahada slums and old buildings. So in western suburbs, this is a main issue, and there are promises by parties also to speed the redevelopment process, and the BMC will be giving faster approvals. That has been mentioned in the manifesto. Then air pollution and environment, like we have seen the situation in Delhi. So AQI level has increased in Mumbai also. So air pollution is also first time ever is a issue this time in a BMC elections, and a small section of citizens are discussing this issue also. Best bus crisis for the public transport is also top issue in BMC election. Property tax and civic charges is also an issue this time in BMC election. So political parties are offering that property tax will be waived off up to the certain amount, up to the certain square feet of your flat size. Other than that, on the other side, the ruling alliance, BJP, is asking vote on the infrastructure development which has happened in last few years, like Coastal Road, Atal Setu, underground metro lines, and the newly started project, the tunnel between Borivali and Thane. So these are the main offerings to Mumbaikars, and if you are also a Mumbai voter, you are getting a chance after 9 years to vote in BMC election. So figure out which is your polling booth.
All right, with that, it's time for us to slip into a short break. Don't go anywhere after the break. We'll get you more updates on the market. Stay tuned. Okay, I'm Saxena, with me is Shrishti Sharma, and we are taking you through all the global cues, how the global markets moved, and the cues to watch out for before the start of D Street today. But first up, let's see how Asian markets have opened up as of now. We do see a shade of green that's coming in on the Asian markets, except for S&P ASX 200, which is very, very flat. It's in the red. 0.06% cuts is what we are seeing. But remember, Nikkei is trading up 1.5% right now. It has hit its record high on expectations that Prime Minister Sani Takashi could call for a snap election that's likely in the month of February. On the back of that, we did see a Nikkei that was trading up yesterday as well, and today also that is trading up 1.5%. Hang Seng is trading up 0.3% right now. Actually, it's inched up almost 0.5% right now. Shanghai is absolutely flat right now. We also have Kospi that is trading up 0.3% higher. So mostly we do see a shade of green coming in on the Asian markets. But if you pull up the chart for GIFT Nifty, let's see where GIFT Nifty is also. Now remember, Japanese yen has also weakened in the past. It has hit 159 mark against the dollar. It's reached its lowest level since July 2024. Before the Japanese authorities had to intervene to stop the slide in yen. So yen is also trading at the lowest point right now. If you can pull up GIFT Nifty, we'll check how GIFT Nifty is and where GIFT Nifty is at, and we can check the start for the Indian markets as well. So GIFT Nifty also trading with a shade of green there, though we do expect a very, very muted start to GIFT Nifty as well. We're seeing it's flip-flopping between the red and the green, so very, very flat as of now, but can expect a muted start for Indian markets as well.
All right, that's about the Asian handover. But with this, let's also tell you which are some of the stocks that you should be watching out for. And let me take it across to my colleague Meryl, who's standing by with that list. Good morning, Meryl.
Good morning, Srishti. Well, we've got a lot of stocks already buzzing today. Let me take you through some of these. First up, on the back of their third quarter updates, there's ICICI Lombard, which has announced quite a mixed update this quarter, with their premium earned on a net level up almost 12.7% year on year, and their PAT is actually down 9.1% year on year. So mixed numbers coming in from ICICI Lombard. Up next, Tata Elxsi has also announced a mixed set of numbers, with revenue growth steady, but PAT has seen softness in a one-time labor code change. And they've also seen an exceptional loss coming in at around 95 crores, which has taken their profit down to down almost 29% on a quarter-on-quarter basis. Next up, Just Dial has also, third in a row, reported a mixed set of numbers with the profit down almost 10.2% year-on-year, and revenue was actually up slightly at 6.4% year-on-year, which was mainly driven by other income. So this is why Just Dial also come out with a mixed set of numbers. Next up, Adani Energy Solutions has come out with a positive business update. They won a large order worth almost 18,000 crore rupees during the third quarter. And with this, their transmission order book has expanded to almost 77,000 odd crores. Up next, in some other news, there's Spark, which has just had announced its R&D call, and the board is also set to mull fundraising for the company today. And the Railtel actually has come out with quite a significant news. They've cancelled almost 609 crores out of the 822 crores, which was the largest order they'd ever received. This had come from Bihar Education Project Council, and this one is going to be an interesting ticker to watch in today's trade.
Well, yeah, absolutely, Meryl. These are some of the stocks that you should be watching out for. But other than that, let's also tell you which are some of the other counters that will be in focus today. First up is NLC India, as they have said that they have signed an MOU with Gujarat government to develop large-scale renewable energy projects, wherein RE projects include solar, wind, battery storage, and an estimated investment of 25,000 crores is what they are envisaging. Other than that, on Eternal, just yesterday, we were discussing that whole issue about how the ministry is taking note of that 10 minutes delivery model, and they have said that it is not going to be applicable going ahead. But Eternal, that is erstwhile Zomato, has clarified to BSE, and they say that there's no change to Blinkit's 10-minute delivery model and no other development warranting some of the disclosures as of now. That's what they are saying. Interact will also be in focus, as the company has said that they have won a new order that's going to be a domestic order, and the size of this order is 130 crores. So that's a positive development for Interact. And Red Tape, just yesterday we had that whole news flow regarding Red Tape, and now we have a clarification where they say that there's no announcement regarding the stake sale. So that's what Red Tape has come out with. Coal India will be in focus as well after that stellar response for Bharat Coking Coal. IPO gets 1.1 lakh bids for, and that's definitely has created a history with 90 lakh applications issued, booked nearly 147 times on Tuesday. So great response when it comes to Bharat Coking Coal. Other than that, Kotak Mahindra Bank will be in focus, as the stock will trade X stock split in the ratio of 1:5, and Ajmera Realty will also trade X stock split in a ratio of 1:5. So let's watch out for these counters.
All right, so these are the counters that you need to watch out for in today's trading session. But with that, it's time for a quick breather. Don't go anywhere. We'll be right back. Welcome back. You're tuned into Market Cafe, where we are getting you all the updates that you need to watch out for. And let's shift focus then to a World Bank that has gone ahead and raised its growth forecast for India for both FY26 and FY27. Now, the Global Developmental Organization sees robust demand in the country, and it believes that the domestic demand can offset impact from Trump's tariffs. The World Bank now sees FY26 GDP growth 70 basis points higher at 7.2%, and estimates of the FY27 growth is 20 basis points higher at 6.5%. My colleague Ankur Mishra is joining us with the details for that.
Yes, definitely. World Bank has raised the GDP forecast for India, and 7.2% GDP is projected for FY26. But remember, it is slightly lower than what our own Reserve Bank of India is estimating. However, the impact of tariffs has been talked about in this report, and therefore, if you talk about the next year, India's economy is expected to grow at 6.5% in FY27, and now this is an easing from the estimation of 7.2% in the current fiscal, but overall, India is seen as steady growth momentum will continue for the country. In its latest Global Economic Prospects report, the World Bank has noted that the impact of higher U.S. tariffs on Indian export is likely to be cushioned by stronger than anticipated momentum in the domestic demand. Remember, there were announcements which were made on GST front as well, and therefore the demand is going to be there on ground, and that is the anticipation which is done by the World Bank currently in its latest report. And they've clearly stated on tariffs also that despite higher tariffs on certain exports to the United States, the growth forecast has remained unchanged relative to June projections. And this is primarily because the adverse impact of higher tariffs will be offset by strong momentum in the domestic demand than previously anticipated. So all in all, the growth forecast has been raised for India till FY28. It is going to be a bright spot among the other emerging economies, at least with 6.5% growth and above for next 3 years. And the impact of tariffs is already seen in this report. So it is a kind of a positive report for India and India's growth story.
All right, thank you so much, Anga, for getting us all those details. But with this, let's also listen into what Devendra Pant, Chief Economist at India Ratings, had to say about World Bank's India outlook.
We have data for 3-4 months post the tariffs were imposed. And if I look at the data even for the previous months, there was not a normal months in the sense in the expectation of rise in tariff, a lot of goods were exported. Now, if I look at first couple of months data, that shows a deep double-digit decline in the exports. But if one looks at the data post that for the November month data, you will see a good growth. So just based on 3 months data, where the movement is in the both direction, it will not be correct to say there is no impact. There is impact. The impact is more felt at the sectoral level and especially the exports part. What has happened is the kind of, whether one say the reform or the kind of steps taken by the government.
And well, let's shift our focus to auto giant Tata Motors passenger vehicle. The company has launched an updated version of its fast seller Tata Punch called the Tata Punch Facelift. ET Now's Anjali Palot caught up with the company's managing director Shailesh Chandra to understand what set the car apart from its competitors and also if the company was planning to hike the prices. Listen in.
It has become more bolder, safer, faster and smarter. I mean, these are the 4 aspects, and quickly I'll elaborate on what therefore has changed. If you see the look of this car, the engineering of this car you saw in terms of its safety.
Right.
The design should reflect the real strength of this car, and that is the confident SUV look that you have made it more pronounced in this. At the same time, you have made it more modern.
Now, with this one, do you expect it to also have a similar track record or even surpass that? And what kind of market share do you see it commanding in the coming years?
No, its segment, in its own segment, which is subcompact SUV, it commands more closer to 40% market share. And the last peak would have been upwards of 200,000 in a year in 2024. Last year also, we would have retailed about 185,000 or so. So it was very close to that number. Now, with this kind of an uplift, in all those 4 aspects that I said, and additionally, you have given turbocharge. So you attract new kind of customer segment. Also, we have given a no compromise AMT. So no compromise CNG, AMT also coming in. And CNG is a big part of the sales of Punch, which is nearly 35% of the sales comes from CNG segment. So that should also give a boost as an additional set of customer segments who are looking for convenience. So there's no reason why we should not be thinking of a new peak beyond what we had achieved in 2024.
Right, now talking a little more broadly about Tata Motors, Q3 was a great quarter for auto sector overall. It was the post-GST rationalization where we saw that spike. What is the outlook for the next quarter? Do you feel like the GST rationalizations the gains from that have been fully realized, or there is, some effect that is still yet to come by?
Quite hard to say that, but there was a lot of pent up because of that 1 month lag between the announcement in August 15 by Prime Minister and the implementation of GST happening on 23rd September. So that pent up hopefully seems to have got released in the festive season as well as in the December. But the growth rate generally has gone up because of significant reduction in the prices of all the categories of car, not only just the small car, but all categories of car. And that's why you are seeing growth rates upwards for 20% and so on post GST 2.0. Quarter 4 should definitely remain double-digit growth. This is a what to say quarter of offtakes, and retail typically goes down because there's a lot of pre-buy which happens in quarter 3 of a financial year. But if I have to see the numbers that I've seen in the last 15 days, you clearly see the booking rates showing that kind of growth versus last year.
Right.
So I do believe that double-digit growth will continue in quarter 4.
Right. And you've said that some pricing, advantage is what is also boosting the sales. But at the same time, we're seeing across different manufacturers that we're seeing a price hike coming in. Is something like that on the cards for Tata Motors as well? How worried are you about the input costs rising, what we've seen with the rupee depreciated?
Yeah, so, just let me split this into two parts. One, that there is a benefit that government has given, 10% reduction, that has to be retained as a baseline. Commodity prices and forex have increased in the last 1 year, nearly 2% of revenue, which has not been passed on to the consumers. One, because the market was soft before GST.
Right.
After GST, we wanted to give the benefit fully to the customers. We did not want to increase. But now definitely there's time to pass on some of those commodity price increase part and the forex changes that have happened. And that will be announced in the coming.
All right, but moving on to another story then, and India's Labour Minister Mansukh Mandavia has stepped in to rein in the quick commerce race, urging Blinkit, Zepto, Zomato and Swiggy to drop 10 minutes delivery branding. Now the move seeks to ease pressure on gig workers after 2 lakh riders staged a New Year's Eve strike demanding safety amid the growing scrutiny of ultra-fast delivery timelines. My colleague Prakash joins in with more details on the same.
Well, in a significant move, the Labour Minister has asked the delivery aggregators to remove a 10-minute delivery deadline service from their platforms. A very significant move, in fact, a very positive development for gig workers. In fact, the Labour Minister has intervened in this matter following huge protests from gig workers organizations for quite some time. Sources indicate that a meeting was held with the leading platforms, including Blinkit, Zepto, Zomato and Swiggy, to address concerns related to delivery timeliness. In fact, sources indicate that the Blinkit has already acted on the directive and removed the 10-minute delivery promise from its branding. And other aggregators are expected to follow this directive in coming days. A very significant development coming in. In fact, this move is very significant, ensuring greater safety and security concerns and improving working conditions of gig workers. Remember, this issue gained traction, in fact, in political circles as well. Leaders from various parties have raised this issue, and following that, the Labour Minister has made significant intervention and asked these delivery aggregators to remove a 10-minute delivery deadline service. A very significant development coming in. In fact, this move is very important to ensure their service conditions and then, of course, address security concerns. At this point of time, a very significant development coming in on the direction of the government. Delivery aggregators have decided to remove 10-minute delivery service deadline.
And well, here's what the experts said on the issue of the government recommending against the 10-minute delivery practice. Let's listen in.
What we are seeing now is a shift from celebrating speed and efficiency to questioning who bears its costs. So for years, platforms have framed ultra-fast delivery as efficiency and convenience for the customer, but they've rarely asked who bears the cost of that convenience. So we have seen in recent times accidents and workers speeding to deliver. So this policy intervention by the government shows that regulators are now focusing on bringing fairness into the equation in the gig economy. And also, it is a wake-up call for middle-class consumers like us. Even I have been ordering through quick commerce platforms, but it's a huge privilege that we have been used to. I mean, the 10-minute delivery of bread for, the guy makes one trip for bread and then another trip for butter, is huge privilege, which we have never seen even in 6 years, 10 years ago. So it is just after the pandemic that this has happened. So this privilege at the cost of workers' precarity was something that needed to be corrected. And I'm really happy that the government has done that.
There is no rationale for this 10-minute delivery stuff. Nowhere in the world, this kind of 10-minute delivery happens. And probably there is no need for this 10-minute delivery as well. Yes, quick commerce means delivering quickly. Quick commerce doesn't mean that, you order something and you will get it tomorrow, which is normally the e-commerce, modus operandi, tomorrow, day after, or something like that. Quick commerce ensures that you will get delivery within a certain span of time, which is very, very quick and much quicker compared to normal e-commerce. So definitely for quick commerce, there is a rationale in a country like India, where I think everybody is trying to achieve certain things within a specified time frame. So quick commerce is here to stay and it will stay. But removing this 10-minute, I think, is a good step and it's a step in the right direction. I don't think anything will change as far as these quick commerce companies are concerned. They will continue to compete on multiple fronts, including delivering within a certain span of time. Just that 10-minute was putting incremental pressure on the entire system and the ecosystem as well. I think that goes out of the way now.
All right, and moving on to another story then, and DFS Secretary reviews the performance of PSU insurance companies, where DFS Secchi reviewed financial and business performance for FY25 and H1 of FY26. Prakash joins in on the phone line to tell us more.
Well, that's an important development coming in, as the DFS Secretary has reviewed performance of PSU insurance companies, and this is primarily to review their financial performance and business performance for financial year 2025 and first half of the financial year 2026. We're given to understand that the companies such as LIC, General Insurance Corporation of India, New India Assurance, National Insurance Company Limited, United India Insurance, Oriental Insurance Company, and some other companies have attended the meeting. And DFS Secretary has reviewed their performance and business progress based on defined parameters the government has defined a few years back. As per the statement issued by the Finance Ministry, issues such as profitability, digital onboarding, and customer-centric reforms were reviewed during the meeting. Along with that, the Secretary has asked insurance companies to focus on increasing profitable business and devise strategies to reduce loss ratio going forward. In addition to that, resolution of public grievances was also part of the discussion, where the Secretary has specifically told insurance companies to give it priority and try to resolve any such grievance in time-bound manner. So these were important issues which were discussed by the DFS Secretary along with their financial performance. Back to you.
All right, with that, it's time for us to slip into a short break. Don't go anywhere, we'll be right. And corporate India is looking to budget for the growth-friendly measures, policy clarity, and a push to revive the private capex. Key asks include tax rationalization, incentives for manufacturing and exports, and continued infrastructure spending. Now, easing cost pressures and improving ease of doing business remains high on India Inc.'s wish list. My colleague Ashesha is now joining us with more details on that.
Well, yes, so the union budget is round the corner, so let's take you through India Inc.'s wish list for Union Budget 2026. And let's start off with two sectors which have been impacted the most on account of tariffs that were levied by US government and Trump administration in August this year on India at the rate of 50%. One is textiles and the other is cut and diamond industry. That sector clearly was impacted on account of tariffs, so they are seeking financial incentive from the government to perhaps combat the impact of tariffs that have been levied. Next up, sugar. Long-standing ask from the government by the sugar sector has has been with respect to MSP on sugar prices. Remember, MSP on sugar prices have not been revised since 2019. So that is one big ask from the government. And second is also with respect to ethanol prices. Ethanol prices too have not been revised for the last 2 to 3 odd years. So that is one revision that the sugar industry is seeking from the government. So MSP revision and long-term clarity on sugar and ethanol prices is the ask of the sugar industry. Let's also put the spotlight on some other sectors then. Cement. They clearly are asking for focus on infra development, rural economy and affordable housing. Remember, infra and housing total contribute nearly 60 to 70% of cement demand in the domestic market. So clearly, government's focus on infra, economy and housing will aid the cement sector. Let's also talk about a couple of other sectors which will be in the spotlight, and the other one is aviation. The aviation industry is seeking setting up new airports, expanding existing capabilities and capacities at the existing airport, and that will be a big positive for India's aviation sector. That, of course, is a duopoly market at the moment, but of course, all eyes will be on any kind of developments within the aviation sector. Commercial vehicle then, support to retire older vehicles, which will drive replacement demand for the commercial vehicle segment. They are also seeking higher rural income levels, which will perhaps aid light commercial vehicle demand, and that is one demand that the commercial and the auto segment is seeking from the government. Let's talk about the next sector then, and that is the alcohol beverage industry. Remember, state-specific taxes and regulatory concerns is a big problem for the alcohol beverage industry. So they are seeking harmonized state-level regulations, unified national excise norms. So any kind of unification with respect to excise norms that can be unified across the country will be a big positive for the entire alcohol beverage industry. Lastly, let's talk about the pharmaceutical sector and the healthcare sector. They are seeking PLI expansion, GST 2.0 on key raw materials, especially with respect to inverted duty structure, which is a problem for the pharma sector. Restoration of tax SOPs on research and development will also be a key positive. So these are some of the expectations, some of the asks from the government. We put the spotlight on several sectors and India Inc.'s wish list for Union Budget 2026.
All right, thank you so much, Ashisha, for getting us all those details. But Infosys is all set to come out with its Q3 earnings, and Ishika is here to tell us what the street is expecting. Ishika.
So Infosys is coming out with its Q3 results soon, and here's what the streets are expecting. They're expecting revenue, EBIT as well as EBIT margins in fact to remain flat this quarter due to seasonality. And some of the key expectations this quarter are that EBIT margins are set to improve, aided by Project Maximus as well as currency tailwinds. Flat but and not substantially, however, and revenue may be seen down due to fewer billing days and no prior mega wins. Furthermore, we can expect a material quarter-on-quarter jump in large deal TCV given the mega deal win announcement in October of 2025. And here's what the investors should keep track of going ahead. The CY 2026 tech outlook. Furthermore, they can track pricing pressure and competition in large deals, followed by client willingness for margin dilutive transformative programs, as well as pace of enterprise AI adoption and pricing impact. Another thing to keep track of is incremental benefits coming from Project Maximus. Now, going ahead, we can expect a flat yet robust quarter from Infosys. And they've also given a guidance last quarter. They revised their full year revenue guidance to 2 to 3% in CC terms from prior guidance of 1 to 3%, right? And they also mentioned their full year EBIT margin guidance unchanged at 20 to 22%. Back to you.
Thank you so much, Ishika, for getting us all those details. But the other counter to watch out for in today's trading session is actually RailTel, because not a positive news flow coming in as the company has announced a cancellation of Bihar education orders worth 610 crores. And that is a setback coming in for RailTel, though the overall order book was over and above 8,000 crores is what the company informed us during the con call of Q2. But along with that, what is interesting to note and is that this particular cancellation has come in at a time wherein just in Q2, the company did say that the kind of supplies that they were making to the Bihar government for schools, setting up some of their labs, and they were quite excited about it. And the whole execution of this order was slated for 31st of March 2026. That's just a couple of months away. And just before that, we have seen this particular cancellation coming in, which was supposed to be one of the biggest order coming in for Realtel for such specific products. And as of now, what we're getting to understand is that, yes, of course, the cancellation has come out for smart classrooms, middle schools. The order size was of around 262 crores. To set up the secondary and senior secondary schools smart classroom, the order size here was 257 crores. And for teaching learning material, providing for the class standards of 1 to 5th, the order size was close to 90 crores. And even this particular cancellation has come in. Two other orders were also a part of their 8th September 2025 disclosures, wherein the company did inform that they will be setting some of their newer labs. That particular order is still intact for now. But yes, out of over almost 800 or 850 odd crores of order announcement that was done back in 8 September 2025, out of that, 609 crores of orders have been cancelled just a couple of months before the execution timeline was there. So a Realtel order book cancellation, definitely a setback for the company, and that's why the stock will be in focus, and we are expecting to see some bit of a negative impact on this counter as well. But Ankita, believe so that ICICI Lombard can be yet again in focus.
Absolutely, Shrishti, we have started with the earnings, and ICICI Lombard General Insurance has reported a 9% year-on-year uptick in the downtick in the net profit in Q3. How have the numbers really fared for the company? The rest of the numbers, do all the number crunching, and are joined by Mitali, who's here with the details of ICICI Lombard.
Right, so company reported their earnings for Q3 yesterday, and for the PAT, if we see, there has been a decline for 9% for this quarter, majorly due to a one-time impact due to the labor code adjustment. That labor code adjustment one-time impact was around 55 crore rupees, and due to which the PAT has seen a decline of 9%. If you remove that impact, the PAT stands to decline around 3%. If you talk about their combined ratio, it stands at around 104.5%, while removing the impact of the one-time wage impact, it would be around 103.5%. Talking about the return on equity, it stands at 16.5% compared with 17.5% on an adjusted basis. Now, the company absorbed that one-time hit, and it is said that it will be amortized. The 17 crore out of this 55 crores will be amortized over the next 3 years. Also, the management remains optimistic, citing strong momentum heading in Q4, and the company is targeting a premium growth of over 100 to 200 basis points above the industry. Now, the key focus areas will be including the expansion in the new vehicle insurance, continued retail health growth, deeper penetration in Tier 2 and Tier 3 markets. While the near-term volatility remains due to the elevated cost pressures, medium-term growth will depend on the execution, product mix, and competitive strength. If you talk about the brokerages, the stances from the brokerages remain fixed, and Morgan Stanley maintains an equal weight on the company with a target price of 2,035 rupees, citing balanced growth and valuation. While if you talk about Goldman Sachs, they stand neutral for the company with a reduced target price of 1925, flagging the margin pressures ahead for the company. Citi has given a sell rating, and they have given a target price of 1760, pointing to the premium valuations and limited near-time upside for the company. Lastly, let's talk about Nuvama, which remains constructive with a buy rating for the company and a target price of 2,350 rupees, backed by strong retail health and digital execution. So that is all for ICICI Lombard. Back to you.
All right, moving on then to the next counter that is going to be in focus, and that is ICICI Lombard. That has also reported its numbers, and the brokerage is ICICI Prudential that has come out with its numbers. Now, let's take a look at how the numbers are looking. Well, ICICI Prudential Q3 results were ahead of the sparsely available consensus. Now, the retail protection growth, the poor annuity sales and the success in partnership distribution were the key highlights for the numbers. Now, they maintain, the brokerages have also come out with a note, and most of the brokerages have cut a target price, and they've given a downside of almost 4% on ICICI Prudential. Also, as far as the other numbers are concerned, if you look at Nuvama, that is maintaining a buy stance, they are maintaining a buy call of 770 rupee, and Goldman Sachs that are maintaining a neutral stance of 690 rupees. Also, the margin impact is likely to be offset, but the distributor commission is under renegotiation, and the operating cost optimization is something that the brokerage is watching out for. So as far as the numbers are concerned, we do see medium-term top-line growth target of 13 to 14% that the company has given. They have revised the FY26 28 estimates of VNB, that is up 3% on better margins, and the focus remains on absolute VNB growth, and they see limited upside going ahead. So that's the numbers, that's the word coming in for ICICI Prudential Life. We'll see how the stock reacts today after it has reported its numbers.
All right, but moving on to Coal India then, because Coal India's subsidiary Bharat Coking Coal IPO was subscribed 143.85 times on its last day, and in fact it saw over 90 lakhs applications on it, and definitely attractive bids over 1.14 lakh crores, and this makes it one of the widely participated IPOs. And if we look at the details, then the QIB portion was subscribed 311 times. The NII portion saw a total subscription of over 240 odd times, and even the retail participation, retail investors subscribed 49.4 times, and the employee share was subscribed approximately 5 times. So definitely a stellar response coming in for Bharat Coking Coal. But we actually caught up with the management of Coal India and Bharat Coking Coal to understand their volume growth and capex plan going ahead. Listen in.
Year to year, we will improve at least by 2 million tonne, and around 29-30 our production target will be 54 million tonne.
Our capex plan is close to 1,000 crore rupees per year, and the main outlay for capex is for building up our washeries and getting land for the mines.
In the first half, as we slipped the production target, the reduction in the e-auction premium has led to the reduction in the EBITDA in comparison to the previous year. But if we will go to the whole year, because we had already ready with the OB exposure, more coal will be extracted, it will be covered up. And the coming year, as we are going for the more washed coal sale, EBITDA is projected as per on increased coal production of the washed coal. That will give a volume to the EBITDA.
And while the U.S. Secretary of State Marco Rubio spoke with External Affairs Minister S. Jaishankar, exchanging New Year greetings and congratulating India on its new nuclear energy legislation, Rubio said that the move opens doors to stronger U.S.-India civil nuclear cooperation, energy security and opportunities for American companies. Both leaders also discussed progress on the bilateral trade talks. And Delhi recorded its coldest January morning in 3 years, with the Safdarjung hitting 3 degrees. Now, several degrees below the normal is the word that's coming in from IMD, and they say that the cold wave conditions are likely to continue, while the maximum temperature is expected to be around 20 degrees centigrade.
And the CBI has summoned actor Vijay and a second round of questioning on January 19th. He was questioned for nearly 7 hours on Monday, where he denied any role of TVK in the stampede and placed responsibility on the district administration. And a standoff brews over the T20 World Cup 2026 as Bangladesh refuses to travel to India, citing security concerns. The ICC has asked the Bangladesh Cricket Board to reconsider, saying the itinerary is already finalized, with talks set to continue.
All right, with that, it's a wrap on this edition of Market Cafe. Shrishti and I will take your leave. As you can see, it's a very muted start to Indian markets. Don't go anywhere. The market is taking the market action forward.